reading from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Nashville. I'm Charles Brown, Portfolio Manager with CB3 Financial. It is Thursday, January 7th, the first Thursday of the new year, and our first program from our new location. We are so glad you're with us tonight. So much going on. I'm calling this the 13th month of 2020 because in so many ways, COVID seems the same, the markets seem the same in a good way. And of course, politics, politics are more of the same and really took a bad turn yesterday. And I don't want to spend time on that really because you know what's going on. This is a financial program, but things are very serious, obviously, in our nation right now. And we want to focus on the positive. I do think 2021 is going to be a phenomenal year, and I'm hopeful a more peaceful year than the way it has started. So we're glad you're with us, and just as you would expect, we're talking about the aftermath. We're looking at 2020 in a review. We're looking ahead to 2021. There's actually so much that I want to cover about the 2021 prospects. I'm only going to hit two topics tonight on 2021, and then next week I'll have an extensive overview about my projections for 2021 because I won't need to cover 2020 in review because you guys will have this recording. Okay, if you're new to the broadcast, those of you from Nashville, I want to say a special thanks to our neighbors who welcomed us so warmly last night. We were really blessed by having just people right next door come over, welcome us to the neighborhood, bring us some gifts. We're just glad to be here. I'll tell you more about that at the end of the program. But special thanks to Tom, my producer, for the new video outline and the highlights there of Nashville and the graphics from Heidi. Appreciate that so much. Those of you that are new, please subscribe to us on YouTube, okay? Click the little bell and you'll get notified whenever I go live, usually Thursdays, sometimes Mondays, and sometimes other times when things are really breaking. I'll have an impromptu live broadcast. Also, be sure to follow us on Twitter. We tweet every day, and actually yesterday I had some tweets intraday as well, okay? We're also on Facebook and LinkedIn. We've got quite a few people following us on LinkedIn. So, COVID America, Corona America, I used to call it. Actually, COVID-19 is the official name, but Corona America. You know what? Some things never change here, guys, and we're still seeing a tremendous amount of new cases, over 250,000 new cases yesterday, but we all know the reason for this, and that's because we are seeing so much more testing being done, and that to me is a positive. Obviously, the total number of confirmed cases, less than 10% of the population, but it's just continuing to ramp up, quite a few deaths. And of course, we're not going to know for years, guys, whether these are people that are dying from COVID-19 or with COVID-19. But nonetheless, I think this ramp up is specifically tied to holiday celebrations where people just had, hibernation frustration and got together without the precautions. And I mean, I know I wore a mask at our Christmas gathering and I looked kind of strange to some people, but need to protect myself. So that's where we are there. This spike that we see up to 300,000 cases in one day, We saw this tapering off. Look at the chart from August to September, and I really thought that was going to be a taper. But the second wave, they warned us from 1919 that the second wave is worse, and we clearly have seen that. So we won't know how this all plays out, obviously, for several years. But we are hoping this is going to taper off so we can sort of get back to some kind of normality. As far as hospitalizations, the dark states here are really maxed out. More than 50% of their hospital beds are for COVID cases. And then the lighter states, I'm pleased to see the one state on there that's in white, which is not having a crisis for hospitalization beds, is Tennessee. But there are other states, in the southern part of the country, obviously, that are definitely in a crisis mode. I've shown this graph before, but it's important that they're starting to administer the vaccines in order of risk. So residents in home care or caretakers, and then those people 80 years of age or older, and then 75, and then 70, and I'm in group 5, 65 and older. So when it becomes available, I do plan to take it. I probably won't do a video of myself taking it, but that's my decision. But just be aware of that when your time and availability is, in the timeline here on this chart. It's something you may want to consider. I think probably to be able to fly, to be able to go to sporting events, concerts, etc. We'll see how the new administration handles this, but it's absolutely positive that those people attending those kinds of events or flying may be required to show proof of vaccination. We just don't know. Again, there's a change of administration now in less than 2 weeks. I'll put this up here, New Year's resolutions. I think my trainer's on the line, and I see exercise more and eat healthier. Those are my top 2 goals. So I'm in sync with the rest of America on here. Definitely deciding to really get back and get serious about getting healthy. And candidly, I believe, I could be wrong, but I believe that's one thing that helps at least minimize the chances of a really bad case of COVID-19. Not sure where your resolutions fit on this scale, but I think it's time for a healthier life, a more restful life, a more peaceful life in 2021. I'm sure we can all agree on that. So let's see what you guys think. Our first question for the year. Will COVID-19 affect your life in 2021? Answer A, yes, it will to a great extent. So that would be a pessimistic answer. Answer B, yes, in some minor ways. Answer C, well, maybe. I don't really know yet. No is D. It's going to be life as it was before 2019. That's a very optimistic answer. And then E, no, I'm used to it because of 2020. So because of the 25-second delay here, I'm going to look over in the chat box, see if you guys have any questions. And by the way, those of you that are new and even that you've been watching for a while, feel free to throw a question in here anytime. Because of the delay between when I'm saying something and you read it, it gives me time to look through here while you guys type your answers in, okay? Welcome, Debbie. Good to see you. And Ann, good to see you. Good to see you. Good. Yeah, well, come on down here. Hey, Jimmy from California. Welcome to Southern Hospitality. Thank you, Nell. I appreciate that. Georgia's scheduling vaccines for mid-Feb. That's good to know. And you're in my age bracket is similar. Dr. J from Ohio, good to see you. So looking at these answers here. There's T. There's Tommy, I should say. And all right. Charlie Brown, 4. You're there. We got some A's, some B's, some C's, some D's. Yeah, I'm kind of with Charles Todd on this. I think it's going to be life as it was in 2019 once everybody's taken this, okay? And yeah, there's some of this being used to it. I get it. Hey, Debbie Demigalski, haven't seen you in a while. Good to see you. Answer B, yeah, in some minor ways. Guys, thanks for the answers. Again, if you have questions over and beyond, this is supposed to be an interactive program. Feel free to ask those. So the U.S. economy, gosh, there's so much going on here, guys. These are the final numbers now. Final numbers for 2020. NASDAQ, clearly the winner here, up 43.5%. S&P up 16.3, Dow up 7, Russell 18.5. And as one of our viewers, Dr. J, pointed out, gosh, the Russell lagged all year and ended up coming in second place. And I'll be talking more about the Russell when we go to the 2021 predictions. But that's just an astounding number. Now, guys, this is our actual performance. I'm going to take a second here because A lot of people have said, do you actually trade these programs and do you show your performance? What you're seeing on the screen, and actually have been since I started the program, is my actual account statement at Interactive Brokers. It's audited. You can check this out. You can have me send it to you. I black out the account numbers, obviously, because the internet is a dangerous place. But our CG program was up 62, almost 62 and a half last year. Now that's, a pretty strong return when the S&P, you just saw what the S&P was, right? The blue line is our program. The other three lines are other benchmarks, the S&P, the EFA, which is European markets, and VT is the Vanguard. Now, Vanguard 5000 fund, I should say. So the SG program actually beat it by a percentage point and a half. Okay, so 63.5, again, just obliterating the indices. Now, this is the best year I've had since I've been doing this. I've been trading since about 1991. Okay, so you can do the math on that. That's 30 years this year. Now, our DG program, which is all exchange traded funds, still up 24.3. But the thing with this program is it has far less risk. Those of you that trade CG and SG with me, and I realize that not everyone on this broadcast is a client. Okay, that's fine. We're glad to have you here. You don't have to be a client. But a lot of our clients have CG and SG accounts, but they also have a DG because in times when the markets are really crazy, like on March 21 to 22 and 23 of last year, when we had one day we were down 13% in CG in one day. But I can say, if you can live through that, look at how it turned out. But you'll see if you look at the blue line here, it's not nearly as volatile. Okay. The last program we have, and this is a disappointment, candidly. This is our most conservative program, but it's not supposed to be that conservative. Unfortunately, what happened is, if you'll see the huge move down there in the low of March 23rd, we were up on the year, but we trailed the Dow, which is what we're trying to pace here. We don't pace ourselves against the S&P in this program because it's mostly for dividends and not so much for growth. We've done some changes in this program. Those of you that are in this, I don't have anybody that's just in this program, but for people that want to balance their risk, that have a CG account maybe, and this GI, which is growth and income, you'll see the top performers here, Apple, Microsoft, BGS. But believe it or not, those top three performers are only up a couple percent on the year because they took such a hit in the early part of the year. So if you want more specifics, I'm happy to have a conversation with you. Just let me know. So look at this in green here. The number of stocks that were up at 400% at the yearly peak, okay? This is going back to 1999 and 2002 when we saw these kinds of returns. And if that gives you room to pause or reason to pause, I understand that, because you might be saying, well, this is getting overheated. My opinion, as you well know, is that we are in a secular bull market. Back then, that was the end of the bull market. We really only started this in April of 2013. This secular bull market started on April 10th, 2013. So I think we have room to run, and that's why you're seeing many stocks, not tons of them, but almost 50 stocks that had a 400% return last year, and we were in some of those, just so that you know. So returns for the year, the NASDAQ up 42%, the S&P 18. You saw these numbers up front, but I wanted to put in some other, I'll call miscellaneous asset classes here. Colored diamonds, okay, as opposed to clear diamonds. The global bond fund, hedge funds, classic cars. So this is not your, Chevy from 2009. These are 1958 cars or whatever. Fine wine, and then private equity, just a huge loser on the year, and art as well. These are illiquid assets. That's just not something we have an interest in trading. We tend to trade, in fact, we do trade only liquid assets. All of you guys that are with me as clients trade liquid assets that can be dissolved or liquefied to cash within 48 hours. On a graph, just to be able to compare the major indices, NASDAQ versus the S&P and the Dow, look at this gulf. This is the reason for the outperformance in our programs, because we don't believe in diversification. Now, that may be heresy to some of you who think that you've heard that since day one, or since you were a kid, or your parents told you that. I don't know how you heard that diversification is a great strategy. It is not a great strategy. For instance, there are 11 sectors in the S&P 500. We're currently only invested in 5 of them, and heavily only 3 of them. We look for winners in the sectors, in the industry groups, and then the individual stocks. That is how we make money in the market. A lot of people would say, if you had just been able to sidestep just 1 month from February 19th to March 23rd, we would have made a lot more money. Yeah, that's exactly right. If you can tell me when those times are and you can be reasonably accurate, you probably, could work for me for a few days. And if you're really that good at it, you're going to be a billionaire very, very soon. What's the point I'm trying to make? Look at the chart here. The value of $10,000 invested in 1980 through August of 2020. So that's 40 years almost. If you're invested in every day in the market, that's all the good days, all the bad days, that 10 grand turns into 700,000. But if you miss the 5 best days, that drops to 420,000. If you miss the 10 best days, for instance, April of this year, there were 2 days that returned more than 10% in a day. And if you miss those, your return drops to just a little over 300,000. So making a mistake even on 1 or 2 or 3 days can have a dramatic impact on your portfolio, pause, wait for it, over a 40-year period. This isn't just a 1 year or 5 or 10-year mistake. That is why I am very, very careful about going to cash, if at all, because we just can't afford, for those of you that are clients, to have you out of the market when these kinds of days can happen. Okay, and I really should have said this earlier. Guys, this is going to be a full hour. I have a ton of material. I've been off the air for 4 weeks. A lot to think about going forward to 2021. If you have to sign off, I get it. You can come back and watch the replay. 2020 in review. It gets a 1 star from me. All right. What's the 1 star? The 1 star was the market. Now you might say, well, gosh, you're a portfolio manager. That should be 4 stars. Well, okay. But there's a lot of other aspects to life other than the market. Believe it or not. Although Alice doesn't always think that's true with me. But guys, here's what happened in 2020. Okay. We think we had it tough here. Look at these red numbers. Look at these red numbers for the UK, for France, Italy. Okay, much better in Asia. But the European markets really struggled in 2020, without a doubt. Okay, fake fans in Major League Sports. Okay, imagine putting this cardboard up there and you look up into the stands and that's what you see. Only in 2020 could this happen. But I will say that you could probably deduce that that created more stiff competition on the field for those teams. Let's look at behaviors. People said, you know what, we're not going to go to the grocery store. For the early part of the pandemic, we didn't even want to go out of the house. We're going to call a delivery service. And Instacart goes from just an every other week kind of thing for people to almost an everyday. Look at this enormous spike from February through April, and then it tapers off as people distributed between other services besides Instacart, like DoorDash, etc. But even though one's groceries and one's eating out. But the point being, this is a change, folks, that I don't think is going to be different in 2021. But look at this, and that you'd never see this except during a pandemic, in my opinion. Okay? But big bucks stacking up. So what does this stock market return mean for most of Americans? Well, U.S. household wealth had boomeranged to a new record high, 140 trillion in assets, only 16 trillion in debt. And I say only, it's a little over 10%, but that's pretty mild actually. $123 trillion of net household wealth in America. What's the moral of this story? You have to own stocks or some asset that's appreciating, and this year it's been stocks. And candidly, in a secular bull market, it's going to be that way for some time, in my opinion, as a portfolio manager. And if you're in those stocks, it can change your life. Just ask those clients who stayed in CG and SG all year. They're seeing that. One of my favorite metrics is the ISM, Institute of Supply Management Index. Now there's a non-manufacturing, which I want to cover now, and then a manufacturing index, which I'll cover in a little bit. This number has been above 50 for some time. The 54.7 is a strong number. It's not 60, but guys, we're in a pandemic. We're still in technically a recession, although when the first GDP numbers come out, that's going to be overwritten, but we don't have those yet until later this month. So the 7th consecutive reading above 50%, again, in a pandemic. How can this happen? Because we are in a secular bull market. What I try to do on this program is get beyond the histrionics in the news, in the media, and just give you the data and let the data speak for itself, okay? Let the data speak for itself. GDP. Now, for those of you that have said, well, maybe this current administration, which is only going to be around for 13 more days, they didn't really make much of a dent in the trade deficit. Well, look at this huge move here between the trade deficit between the U.S. and China. Yes, there was progress made there, and yet China's GDP continues to grow, because what did they do? They just started channeling their exports to other places, and at the same time, the U.S. GDP did not grow much. Candidly, this is an area where the current administration made promises about significant increases in GDP, and it just didn't happen. Now, yes, did we have a 31 GDP number in the third quarter of last year? We did, but it was coming off obviously horrific numbers in the first and second quarter. So this is going to be an area where I'm going to be watching to see how the next administration is going to handle this GDP race with China, the first and second largest economies in the world. Those of you who've been watching the program know that this is maybe my favorite stock and one of my very favorite companies in America. Why? Because of this man. Elon Musk steers Tesla to a record 500,000 deliveries. He said he was going to do this 2 years ago. In this year, now those of you that have read the news, I'm sure know that he missed by 43 cars. Okay, it wasn't quite 500,000, 5,000, whatever it is, 40 minus 43, okay? All right. Despite a drop in global demand and being in a pandemic. It's just unbelievable. And today, literally today, as I record this, he became the wealthiest man in the world, passing up Jeff Bezos because of his bonus structure, he being Elon Musk, that was put in place if he hit certain sales targets. Why am I spending so much time on this, guys? Because discretionary income is what drives people's proclivities and their pocketbooks. They spend on staples, they spend on taxes, the government spends money and corporations spend money, but it is individual consumer discretionary spending that drives the market. And when people are spending this kind of money on this new technology in a pandemic, in a recession, I have to take notice of that. Those of you that have been with us since $166 in Tesla know that it's just about at $800 today. Okay? What else? There's Tesla versus the S&P. That's the proof of the pudding. You just can't. I don't know how much more graphic I can make that for you guys. I just don't know how. So how does this compare? What are the big stocks doing? So what's the performance? Not the market cap, but the performance. Well, Tesla just blowing it away versus the S&P. It's that little black line at the bottom is the S&P. Peloton, which is the exercise company, Etsy, Moderna, L Brands, Twitter, Apple, NVIDIA. We're in every single one of those, although I missed L Brands. Okay, every one of those but L Brands we were in this year, and that is what makes the difference. Our goal is not to track the S&P 500. You do not need a portfolio manager that tracks the S&P 500. You need one that beats one, or you're wasting your money, in my opinion. Tesla joined the S&P 500 and made it a game changer. Why? Because of its market cap size. The S&P wants companies that are growing, increasing their market cap because it increases the value of the S&P 500 index, which draws more international capital to invest in stocks in the S&P 500. Okay, makes sense? There's Tesla. It enters the S&P, trailing only Apple, Microsoft, Amazon, Alphabet, which is Google, and Facebook. They overtook Berkshire. I mean, Warren's kind of on the sideline, right? Visa, Walmart, Johnson & Johnson, these are legacy names. This is why I pay attention to this. So I'm sorry if you guys are tired of me talking about Tesla, but it's important, all right? It's really important for our economy. What else? The stimulus package, you guys might not have seen this. How does that $600 or soon to be $2,000, because I think Chuck Schumer's, that's the first thing he's going to do is get that handed out. How does this get distributed? Well, mostly to small businesses. We got a little bit. Thank you very much, Uncle Sam. One-time payments. You guys have probably received those. And then vaccine programs, schools. I mean, it's very small slivers of the pie over there. Mainly this stimulus package. And I think this will continue with the next administration. And if anything, the payouts will get juicier. That's just my opinion, but that's what's probably going to happen. Manufacturing PMI, look at these numbers. We're almost back to 2017. Just a rocket. You guys have been hearing me talk about the V-shaped recovery. There's your V, folks. There's your V. Really strong. ISM manufacturing. A few slides ago, I was saying the non-manufacturing. This is the actual hardware. This is the people that are manufacturing. Index rose to 60. Now, you remember from the previous slide, anything above 50 is growth. Anything lower than 50 is contraction. All right, the key takeaway puts the overall series just 10 basis points or 0.1% below the 2018 high. How in the world is this possible in a pandemic, in a recession, in political chaos? Because we're in a secular bull market. I just don't know any other way to say this, guys. I just don't know any other say. You gotta believe me on this, okay? Now, normally I don't show you charts. I'm sorry about my earphone tonight. I don't know what's going on. So you like to see charts that are going up. This is a chart we actually want to see going down, and that's inventory. Now that we've bought a house, we're happy to have less inventory on the market. But when we were trying to find something, it was definitely a challenge. In fact, later on, in this month or early next month, I've got a guest Nashville realtor that I'm going to be bringing on the program. I haven't had a guest in a while. And we're going to talk about this challenge of being in a seller's market. But there's just not much inventory, guys. And related to that, how many months supply? So it's closely related. Why do I show you and spend so much time on real estate pretty much every show? Because the number one discretionary spending item, of course, is real estate. It's discretionary. You don't have to buy a new home. And second most usually are cars, but just because of the price tag of the items. So look at this, the month's supply, it just keeps going down. And that's because more and more people want to buy and fewer people are putting their houses on the market. Manufacturing, job openings, okay, just took out the high. And if I were to go back to the left side of the chart here, this is a 15-year high for openings. What this means is there are jobs and no one to fill the jobs. Now, is some of that COVID related because you've got to go into a manufacturing situation and you don't like the safety risk? Possibly. We just don't have enough data on that yet. But this is a positive number. This speaks to the strength of the U.S. economy, and I like the number a lot. Residential construction. It's hard to not have a house on the market if you're building it, okay? They cannot build fast enough. They cannot build fast enough. This is the dollar volume of residential construction as 2020 came to a close. All-time high. And I don't think you're going to see it change. Now, there is a rotation from different markets. We'll get to that later in the program. Active listings. It's because people are just pulling their listings and saying, you know what, we don't have to move. Our prices are going up. It's kind of like buying a stock. If the stock continues to go up, people say, why don't you sell Tesla? You made like twice in it. Well, because I didn't sell it, now it's like a triple. Okay? If something's going up and it looks like it's going to continue to go up, whether it's a stock or a piece of real estate or a diamond or anything else, you don't sell it. You hold on to it or you buy more. Okay? We've done that with Apple. We added to it in several programs, actually 3 programs at one time. All right, but 2020, what's happening? People just pulling the listings are not adding additional listings. Compare it to previous years. It always goes down a little bit in the winter months, but look at what it did this year, or last year, I should say. Okay, and part of the reason for this is the 30-year mortgage rate. I'll be candid with you until we got a 2 5/8 here on our new property in Nashville, and the average low mortgage rate in America today hit 2 5/8, and I'm seeing people quote 2.5. I mean, who would have thought that? Who would have ever thought that? These are fixed rates. These are not ARMs. These are not jumbos. Obviously, jumbos are going to be at a higher rate. But this is good, and the longer this stays down in this range, the more people are going to buy homes. The more people are buying homes, they have that discretionary income. It is good and healthy for the economy, okay? One of the reasons why stocks are doing so well is because bonds are not. Whenever you see the yield rise, remember, we like charts that are going up most of the time. This is the yield. If the yield is going higher, that means the price of bonds is going lower. This is a positive for the stock market. It is not a positive for the bond market. That's why we only have one of our 4 programs that has any fixed income in it, okay? And we do that for the income purposes. 2021. Guys, what are we going to see in 2021? Well, here's our performance year to date, and look who's in first place, the Russell year to date. Now, granted, we've only had just a few trading days, okay, as in 4. 6.2% for the year. I mean, there was a time last year when we didn't think it was even going to be in the green to finish, all right? The Dow and the NASDAQ at the same, S&P, pretty much they're all in the same ballpark there, 14, but the Russell, whenever you see small cap performance, it means people have confidence that small businesses are not going to succumb to financial constraints that were facing them previously in 2020. I think this is very positive. We have increased our small cap exposure. We don't exactly run to investments within a few days or weeks. If this trend continues, I assure you in February, we will move more into small caps. We have a pretty good exposure to them right now in DG. So it's time for your second question. I'm going to check the box here and see what you guys have asked me. With Joe Biden to be inaugurated on January 20th, the overall stock market in 2021, so you can pick the S&P, the Russell, the NASDAQ, whatever you want to pick. It's going to A, gain 3 to 5%, B, gain 7 to 10%, C, gain more than 10%, or D, it's going to lose ground. What do you think? Let me check the questions over here, and you guys get back to me, okay? Yeah, I agree, Nelly. A lot of people are not going to take the vaccine. That's what I'm hearing. Any crypto comments? Well, actually, yes. Coming right up. Hey, Mark, I'm using Coinbase. Good. Yeah, I know some people. I've got like 3 or 4 clients trading cryptos. We will talk about it tonight. I see Nelly saying to Mark, she's using Coinbase, buying countries that are providing parts for electric vehicles. I'll cover that too. Here's Tom. Okay. CCC, Mormon 10. Okay, Mark 3 to 5. Well, we'll see. Right now, the Russell's more than 3 to 5. 10% or more. Good, Doc. All right. Hossein, good to see you, Hossein. Charlie, got an A, 3 to 5. That's a little conservative for me, but that's why we have multiple people doing multiple answers, guys. Okay, anybody else? All right. Very good. Thanks for those answers, guys. So what about 20 to 21 just to see where we're going this year? The number one change that I see is cryptocurrencies. Okay, so why do I say this? First of all, most of the market, in other words, about 68% in Bitcoin and 13% in Ethereum, these are the two logos, if you will, or the icons for those two currencies, make up the market. So it's dominated by 2 coins, but really by 1, and that would be Bitcoin. So the entire value of the cryptocurrency market surpassed $1 trillion for the first time as Bitcoin skyrocketed to 37. It actually traded above 38 today, up about 30% since the beginning of the year. In the past 12 months, it surged 380. There is no stock out there, with the exception of Peloton and Tesla and maybe Trade Desk, that have had those kind of returns. So that's one of the reasons we're interested in it, but there are others, okay? The total market cap took out the previous record from 3 years ago. I just mentioned that. We're now at $1 trillion in crypto. So that 1 trillion mark holds some validity because it means there are interested market participants with size, okay? It's not just a dabbling or gambling site. It's got size. And in fact, if you look at the central banks that are trying to develop digital currencies, they're behind the game. You'll see active countries, the Canadians, of course. We're in research, but we're not really serious about it. And that's one of the reasons why Bitcoin is starting to look like it could be down the road a competitor for the world's reserve currency. You've got Brazil in there. You've got most of Russia and most of what I should say Western Europe and Russia in there, looking at the possibility of digitizing this currency. The question is, why are they doing that? Well, partly it's because of this chart right here, this astronomical return. This is a logarithmic chart, but 275% return, okay, just since August 20th, all right? It's really hard to fathom. But at the same time, this is what I want to bring home. This is not the webinar on cryptos that I've been telling you about. The US dollar is weakening. So why would Bitcoin be going up and the US dollar be weakening? And the reason for this is because you can print dollars. That's why they're called fiat currencies. You can print yen, you can print pounds, you can print euro. And if you can print them, you can't control the issuance or the number of them in circulation. There are 21 million Bitcoin in circulation. Actually, some of them are not quite in circulation, but that's a different matter. The point is there will never be any more than that. And you could say, well, they'll just create another currency. They will, but that doesn't mean that it's going to have the strength and reputation of Bitcoin. You can know with certainty if you invest in Bitcoin that it is not going to be diluted by a central government or any other entity by issuing more of them. And that is the interest. Why? Because we have an administration. Do you think, whether you're on the right or on the left, that the Biden administration is going to not print money to flood the U.S. with benefits? You know full well they're going to. And Trump did it too. But it's going to be even more so now because all three branches of the government are controlled. Well, not three branches, but obviously the presidency, the Senate, and the House are controlled by the Dems. So this inverse correlation that I'm talking to you about is pretty important. When crypto is going higher, the dollar is going lower for the reasons I just gave you. And this is why we look at this as a valuable asset class, because it's what we call a hedge. That doesn't mean we're diversifying, the word I used earlier. It's a hedge against holding assets in a dollar-based system. Okay? Cryptocurrencies are a hedge on that. And you can actually see the equity risk premium here. It's a little complicated. We'll cover more of this, I promise, when I do the full webinar. But the 52-week change in Bitcoin price versus the equity risk premium. So again, this is kind of getting in the weeds here, but what we're looking for here is an asset in which we can invest that does not have a risk of dilution. It is what we call having finite issuance, okay? All right. Little wordy there. So I want to go back to this. You guys have been asking how I'm doing. I started with 50 grand in September, and I know it seems hard to believe this just ticked up to 176 today. This is an actual account. It's traded at Kraken. This says Interactive Brokers. That's a typo, but Kraken is the exchange that I use. I do trade with leverage. I would not recommend that for any of you because this account moves around like crazy. But again, it's a speculative account. It's not my retirement asset, but what I am tracking, and I just don't think you can do this with paper money. You have to do it, with paper trading. You need to do it with a real account. And I'm doing this because I want to see on days when the market is selling off, especially if the dollar is selling off, how are cryptocurrencies reacting? And what I'm seeing is this huge increase since it became evident within 48 hours ago, 72 hours ago, that Joe Biden is absolutely going to be the next president. So the number two thing, remember, I'm only going to talk about two, is the work at home situation is not going to change. Look at the commuting hours with vehicles in LA County, in Houston, in Boston, in Chicago. Now, with so many entities, so many cities that have a reduction in commuter miles. That's good for some people, but those people, like the public transportation, the conductors on the trains, people collecting tolls on the highway, the gasoline providers, the car providers, people are just realizing we're not going to need that, and that is changing things. So there is a migration from major urban areas, Manhattan, Brooklyn, Chicago, San Francisco, Los Angeles. I'm not sure why Naples is in there. I can't figure that one out. Maybe South Florida and Charles, if you're down there, you can tell me that answer. But this migration started in 2020. It will continue in 2021 after the vaccination is rolled out. I do not see this changing, guys. I really don't. So the outflows that you're seeing at the bottom, Cleveland, Chicago, San Francisco, this is the outflows. We actually in Nashville are the number 3 city behind Austin and Phoenix as far as inflows. Is that going to change the demographics of the country? It absolutely is going to do that. We'll see how that plays out over time. The majority of people don't want to go back to the office. I mean, that's just the reality here. They don't want to go back to the office. They're waiting to see if this vaccine is going to actually make it so they can be safe enough to go back. But even if it does, what are companies going to say? You know what? We've done all right without this. Let's definitely have the vaccine, but maybe we won't come back to work 5 days a week. More than half of U.S. employees currently working from home said they'd like to keep their arrangement. Okay? The reality is that the big metro areas are not going to be able to be as competitive as they once were unless they can fix their mass transit situation. And that means making it safe to ride on mass transit.
For decades, cities have invested in building up their public transit systems and reducing the number of cars on the road. Hundreds of millions of people flock to transit hubs around the world every day, as they travel into work in the mornings and go home at night. Or at least they used to. The coronavirus pandemic has turned the daily commute into a public health risk, from swiping a subway ticket to touching a payment screen or squeezing onto a crowded train. The way many of us used to travel now means risking exposure to a deadly virus.
That's the perfect scenario for the virus to be transmitted, because you got so many people packed in so closely. The risk of infection is actually quite considerable.
To get people to commute again, many transportation networks are trying to make that journey safer. In some cities, this has set off a race to find different ways for people to move. So we wanted to know, how is the pandemic changing the way we commute? A good place to start is with trains. Before cities can start building out their grand visions for the future, they have to deal with the immediate issue of social distancing and sanitization. Mandatory masks, social distancing signs, and one-way walking systems have all become new normals in cities like Paris and London. But the reality of reopening cities means that some transit systems can get overwhelmed pretty easily, and overcrowding makes social distancing particularly difficult. So many are focusing more on deep cleaning. The MTA is testing a UV light system to try and kill COVID-19.
In rich countries, you can even talk about nanotechnology to recover or cover the inside of buses or public transit with surfaces that repel or kill the virus.
In Hong Kong, these robots are rolling through trains spraying disinfectants. Some Beijing subway stations are using a temperature screening system to check for potential fevers, while also using mobile reservations to try and manage the flow of people. And cleaners are using electrostatic sprayer packs to clean trains in many places. But measures like these can be expensive. Professor Julio Davila researches cities and transportation systems in Latin America, the Middle East, Africa, and Asia.
Unless it gets sort of to this extent that is affordable by cities in the global south, I don't see that happening anytime soon.
One way to make rides safer is by not letting trains get too full, and that means sacrificing some ticket sales, which in turn means less money to operate those same trains.
One thing that's clear is that public transit systems around the world are in very difficult financial situation.
Unlike rail systems, roads are a little easier to modify for public transit.
One of the advantages we've got with how you manage the road network is that you can implement measures pretty quickly. But redesigning an underground tube station or providing extra capacity there is a tough one to do, and they take many years to do.
New York City is expanding its bus-only lanes to try and alleviate overcrowding. The idea is that if buses have more space on the road, they can increase service, which should make it easier for riders to maintain social distance on board.
There's every possibility there's going to be another huge wave of infections just because we are, carrying the virus to different places.
Dr. James Hildreth has spent the last 4 decades researching viruses.
If you refuse to wear a mask,
as far as I'm concerned, you should not be allowed to use the service because not doing so puts others at risk.
Shared surfaces and limited air circulation pose a particularly big risk for bus drivers, who are among the people who don't have the choice to work from home. After at least 33 London bus workers died from COVID-19, the mayor temporarily had passengers enter the bus from the middle doors to avoid contact with drivers. Since then, the city said it's worked with researchers to improve the protective screen between the driver and passengers. And some buses are running with limited capacity and skipping stops when they hit that limit.
I think it's inevitable with a mass transit system that there will be times when social distancing is very difficult to manage.
What I tell my team and my family is that we should all expect to be doing this until the middle of next year.
In the meantime, some cities are looking for ways to help people avoid public transit altogether.
Local governments are now widening sidewalks and taking space away from cars.
We have been kind of reallocating road space for pedestrians incrementally pre-pandemic, but I think the pandemic has given it greater urgency. The worry I've got is that is because people aren't using public transport, they're returning to cars. So that's one of the reasons why we're reallocating road space for pedestrians and cyclists. If I had unlimited money, I'd probably put more into cycle hire, really, because I think that's turned out to be really successful.
London, Milan, Paris, Bogota, and Berlin have all announced plans to expand cycling lanes. And governments are encouraging people to walk to work if they can. Some have talked about limiting the need for people to use public transit by building up local economies with the 15-minute city. It's an urban planning concept that puts people's basic needs like food, parks, and schools all within a 15-minute walking distance.
How will the city function going forward? Is it going to flip to a kind of more local London, or is it going to flip to less people living in London? We don't know.
Another idea to take pressure off public transit systems is to reevaluate the way we work altogether. More companies are allowing employees to work from home, and some transport authorities have suggested employers might be asked to stagger shift times in order to avoid overloading trains at rush hour. So, what does this all mean for commuters?
So one of the things we're thinking about is, when this pandemic is over, how do we get people back onto public transport in a way that they feel safe?
Public transit networks don't operate under a global set of rules, so it's ultimately down to each city and transit network to decide how to move forward.
And what it will do is actually focus the minds of transit authorities, local governments, to say, more than ever, we have to make sure that the whole spectrum of users, the poor, the rich, the women, the people with disabilities of different kinds, have to feel safe about that. That's a big challenge.
So while most of these cities mentioned were European cities, these same decisions are going to be faced by American cities. And of course, the next administration may want to be part of that, as the infrastructure rebuild that did not happen during the Trump administration could likely get done during a Biden administration. So the 2020 election, as I said, I think this is really the 13th month of 2020 and probably will be until January 20th. A lot of 20s there. To me, it was important that investors were largely unmoved Wednesday and Thursday. Now, I am not downplaying the severity, the tragedy, and the repugnantness of what happened in our capital yesterday. It should have been horrifying to every American, and I'm sure everyone on this broadcast agrees with me. And yet, you're seeing here, this is straight from briefing, saying Mr. Trump's supporters. First of all, it is highly likely that there were a mix of non-Trump supporters causing some of that. We don't know that. I do know that just even an hour and a half before my broadcast, that the State Department is, not State Department, the Justice Department is announcing that they're going to be seriously prosecuting anyone that has committed these atrocities. And the arrests now are well over 50. And that's just 24 hours later, well, 48 hours later. So just realize that while it plays an effect on the market, is less than I would expect. And that is because it just reinforces what I've been telling you now for months. We are in a secular bull market, and when markets pull back because of fear, because of social unrest, there's somebody rushing in, at least there has been for years now, and certainly this year, been rushing in off the sideline to buy those dips. The performance since Election Day, and again, we would talk about what happened in 2016 and that, the Trump bump that we're getting in the markets. Well, this is what's happened since the election, guys. The market hit lifetime highs in the Dow, in the NASDAQ, in the Russell, and the S&P today. They may not have closed right at the lifetime highs, but intraday they hit them. These are good returns. These are really good returns. So, and if you're going to do a screenshot, there's this one and the next one that you probably do. So what are the economic and market implications that every investor must be aware of? We'll be talking about this screen and drilling down into it probably the rest of the year and probably next year. It's going to mean higher taxes. Will you be affected by that? It depends on what your income bracket is, but they're going to be higher taxes. There are going to be more regulations. A lot of the deregulation that the Trump administration touted and enacted will be undone. Government picked winners and losers. What do I mean by that? If big corporations fail, the government may decide to go in and bail them out, and they may not. So they may be choosing who gets saved from bankruptcy and who doesn't. That's more activism at the government federal level than the Trump administration would have done. A hastening of societal redistribution. And basically that means taking from those who have more and giving to those who have less. And I'm not trying to be controversial with that statement, but that is in general what a progressive administration does. How does that affect us as investors? Will it dampen our returns? I don't know that yet, but this is what I watch on a day-to-day basis for you as your money manager or as your educator for those of you that aren't clients. Certainly, it's going to mean more government spending, guys. That is unquestionable, okay? This is the next screenshot you need to gather and go back and look at this. So I've gathered, with the help of briefing.com, policy proposals required for approval. So some of these could be executive orders, okay? When it says executive authority, it means executive orders, court challenges, but many of these require 60-member votes in the Senate to pass. But look at the number of initiatives on the left-hand side and which stocks could be affected or which sectors. Can't go through and explain all this now, but do a screenshot on it. If you have questions, send them to me. You know my address, cb3@cb3.com. I'll get back to you on a one-on-one basis. But it's this kind of reaction from a new administration. Here we are still in a secular bull market, still in a pandemic, although we're going to be pulling out of the recession. It'll be real interesting to see how this develops through the course of the year. So investors might actually learn to love unified government. Why am I saying that? It's always been said that, well, investors like non-unified government, okay? Meaning one house controlled by the Republicans and one house controlled by the Senate. One house controlled by the Democrats. Guys, it's been a long night. Thank you for sticking with me, okay? But the reality is, these two men that ran in Georgia that won lost on November 3rd. And this might be the market saying, you know what, we want to go back and see what it's like. And the market move we saw today with new lifetime highs seems to indicate that these two men being elected It's not something that's concerning people at all. And Georgia is not exactly a huge state. I mean, it has Atlanta, but it's not like this happened in New York, California, or Illinois, or Florida, or Texas. So it's significant that this happened. Now, here's a question for you. Are you thinking that these two guys are now among the most important senators? And I'm going to talk here for a while to give you guys time to catch up with this loop. I want you to type the name of the most important senator in the country. Is it Chuck Schumer? Now that we have this new administration and he's going to be the Senate Majority Leader, is he the most important Republican? Senator, Democrat senator, obviously. Is it Rand Paul? Is it Mitch McConnell, who now becomes the Minority Leader? I think the answer is going to surprise you. It's not these guys. It's not McConnell. It's not Scott from Florida. Okay? It's actually a guy you've probably never heard of. Okay? I'll get to him in just a minute. I'm going to see if anybody types it in the chat here because of the delay. So what happens when the Senate is split 50-50? As you probably know, Vice President Kamala Harris will be able to break ties as needed. That doesn't mean that every vote's going to be 50-50, but when there are 50-50 votes, she will be able to break them. Okay, whoever, Adam, good for you. This may be your first time on the show. I'm not sure I remember seeing you here, but you're exactly right. His name is Joe Manchin from West Virginia. Why? He is the most conservative Democrat in the Senate. In fact, several times they've almost cajoled him to switch to being the Republican, but he doesn't want to rock the boat. So what could happen? Rather than having a 50-50 split, if he votes with the Republicans, it becomes 51-49, and Kamala Harris's vote does not count. Bernie, maybe? Thanks, Doc. Probably not. What we're looking for here, the answer, and good, Adam, that's great. Appreciate all the answers you guys are giving me. Manchin, yeah. All right. So here's the deal. You're going to see this guy being interviewed on CNBC, Fox News, all the time because he is the literal swing vote in the Senate now to avoid a tiebreaker vote from the vice president. Ideally, you want the chambers to be able to make their own decisions without the vice president having to come in, but we are technically tied 50-50 in the Senate. New population data, we're near the end, guys, okay, suggests which states are going to win or lose seats. Why is this important? Because in 2022, next election is just down the corner. Do you think we're going to wait a year before people start campaigning for that? Maybe, the afternoon of the 21st of January, there's going to be campaigning for that. And so what does this mean? This means that if you have a red on your state there, you are losing a representative. Why is that? Because we do a census every 10 years. And when we do the census, the next election after that, so in 2020 it's 2022, in 2010 it was 2012, states are gaining seats. So Florida, Texas, North Carolina, gaining seats, Montana, Colorado, Arizona, and the Rust Belt losing seats. Okay? How is that going to play into the politics of this country? Well, you can bet that it's going to. You can bet that it's going to. How is it going to? I don't know exactly, but we'll be watching it because it affects your money. We are seeing a move from more, scattered around the country. The conservative power in this country is moving more towards being located in the Midwest and South, and the more liberal areas are the Northeast and the West. There are obviously some exceptions in there, but that's what we're seeing, and that is what's going to shape policy, I think, for the next 5 to 10 years anyway, and obviously that will have an effect on our investments. So I've shown you this chart before. What are the changes in markets following Election Day 2020? The growth in 2020 in the various markets, and this is just looking at the S&P and the Dow and the NASDAQ, it was actually greater after Biden was elected than it was after Trump. It's really got nothing to do with the person. And I know those of you that are conservative are thinking, well, but Trump absolutely caused that. It would have been terrible if Hillary Clinton. You just don't know. But what I can show you is this is the actual numbers of how the market grew, each of the Dow, NASDAQ, and S&P. And it's stronger in 2020 than 2016. And here's why. Because the S&P 500 performance, and you guys have seen this now 4 times, but it's important. Under a Democrat administration, after 4 years, look at the difference between blue and red. The markets are stronger with a Democrat administration. All right? And the reason for that is because of spending. Now, does that mean it's going to be that way this time? Does it mean that it's going to stay a full control of the Democrats in 2022? Is it going to flip to the Republicans in the Senate or the House? I mean, the House, Nancy Pelosi only's got 7 votes majority. Okay? It's the smallest it's been in almost 100 years. We don't know that. But what I do know is we've got to track it for you, and we've got to make our investment decisions based on the changing political scene in America. And we promise to do that for you. Okay? We're near the end, guys. What will be the economic aftermath after the 2020 inauguration? My portfolio will do better is answer A. It'll do worse is answer B. It'll be unaffected is answer C. And I really don't know is answer D. Let me check the answer stream here, and we're just a few minutes from finishing here. So glad you liked the video, Doc. Thank you. Pandemic could not be stopped with PPEs. Yeah, I'm with you. Evolution will always accept collateral damage. That's a great line. I like that, Mark. Thank you. Still impressed, Adam, that you got mentioned. You knew about it. Good for you. He should be a Republican. Martha, he's been invited to be part of the Republican Party. And who do you think he's going to have lunch with? Mitch McConnell, right? Sometime in, January, late January. Does he have a bodyguard? That's interesting. I don't know. Hey, Andre, good to see you from New York. We got a D. We got an A. Do better. Yeah. Did pretty well this year, Kate, but let's hope it does better. K, we got C, A to D, or A and D for Tom. LED. Well, guys, we're going to do our best for you. That's all I can promise, really. So, Hossein, A. I do think it's going to be good. I think that earnings, I don't think we're not going to have a shutdown. If we have a total shutdown in the economy, then yeah, it could definitely be at risk. So A or C, Dr. J, thank you, sir. So guys, some of you have asked what happened and why. Well, we are in Nashville, Tennessee. Actually, not Nashville. We are in Brentwood, which is a suburb of Tennessee. It's in Williamson County, which touts itself as America's greatest county. I did not make that up. It's a pretty skyline. It's about a quarter of the size of Chicago, a little over 2.2 metro, whereas Chicago is about 8.4 metro. The difference is that Nashville is growing, whereas Chicago is shrinking. Of course, what Nashville is mainly famous for is its music and Music Row. And that was one of the reasons we moved here. The weather is warmer. We were out actually shopping for a washer and dryer in 66 degrees on December 28th, and there was 6 inches of snow in Chicago. That's why when Nellie asked earlier, is it going to snow here? Well, maybe you're thinking of Chicago. I don't think it's going to snow here in Nashville. But it's not all urban, okay? So this shot right here is taken in our backyard. So we back up to a farm, and we have Blue Angus. And one of my friends, Dave, who lives down in Alabama, said, so are you going to have those steaks, I slipped the line. Are you going to have those cows over to dinner, or are you going to have the cows for dinner, since they're Black Anguses? They make great sirloins. We'll see. We have a meeting with the farmer here. We want to get to know him, and we're excited. We think it's going to be a change for us, and going to use the different environment to, relax a little bit maybe, but definitely with everything going on in the markets, there's just a whole lot to experience. So that's it, guys. As you know, I always end the show with this from 2 Timothy, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. It is my deeply held belief that we will not only survive this pandemic, the market challenges, and yes, the political acrimony, especially. I hope yesterday was the culmination of the acrimony, because it's just not who we are as a people. I am still real excited about this year. I'm loving being an American here in the center of the country. Tennessee touches 8 states. It's actually more than any other state. And meeting new people, Gil, Susan, Chris, Roseanne, Dave at Fellowship. Just really good to be here, guys, and excited for all of us as we go into this new year full of hope and anticipation for continuation of success. It's Thursday, January 7th. I'm Charles Brown from Nashville. This has been CB3 Live. Please give me a call if you have any questions. My email, cb3@cb3.com. We will see you in a week. Until then, God bless and take care.